Welcome to the Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place. Here to challenge you to think out of the box, your hosts, Felipe Mejia and Diego Corzo.
Hey guys, it's Diego here with the Rat Race to 5 podcast. Today we have a very special guest, Phillip Vera from Flip Augusta on IG. I'm actually in a studio in Augusta, Georgia. We closed on a 34 unit yesterday. I am one of the LPs in the syndication, and today Phillip is going to be sharing how he grew his portfolio from 0 doors in 2019 to 135 units in the beginning of 2022. He's going to share on what he did to leverage his connections, how he grew his portfolio, how he went from investing in single family to multifamily to syndications. So listen to this podcast because it is action packed. All right. So today we have an awesome podcast because it's not like a regular podcast. I am actually going to be hosting this one and interviewing Phillip. And we just happen to be in Augusta celebrating the closing of a 34 unit where I am one of the LPs and Phillip is a GP. So we happen to be in a podcast studio and I am really excited. So I have actually Phillip in front of me today. And so Phillip, how are you today?
I'm doing well, man. Glad to have you in town, Diego. I know you've made several trips to Augusta, but excited to film the Rat Race to F5 podcast here in Augusta, my hometown. Glad to have you here in town to celebrate the big victory on the 34 unit.
Yeah, and you definitely turned it into a real experience seeing here, being in the studio with the Rat Race logo and everything. So thank you so much for that opportunity too. And I'm excited for what is going to go on later today because we're going to be touring the 34 units and all of that.
Yep, that's right. No, absolutely. Glad to have you guys down. Glad to be in the studio and excited to show you guys what we just bought.
Yeah, so cool. Well, Phillip, tell us a little bit about how you got started and tell us a little bit about you.
A little bit about me. So originally I went to the University of Georgia, graduated with an agriculture degree. No, most people don't know that. I've got a degree in crop and soil science, so turf grass management.
Oh, man.
I was in the golf industry for about 10 years. So 7 of those 10 years I spent at Augusta National Golf Club. It's the best golf club in the world, home of the Masters golf tournament. It's one of the 4 majors. So I kind of jumped in and loved that industry. I had always had a passion for real estate. I grew up kind of when HGTV was just getting started. House flipping shows were kind of the thing. And so I kind of grew up as all of that was really starting to go off. I did a lot of construction when I worked in college, so I kind of knew really that side of the business. Loved the golf industry. Really had a passion for it, but it took a ton of time. It was a huge commitment. I was working, 60, 80, 100-hour weeks, just depending on the season. And when my wife and I wanted to kind of settle down and start a family, I guess I decided I really wanted a change. And so I originally got into commercial real estate with a local firm. I leased commercial real estate space, mostly enclosed malls in the Southeast, and kind of got a crash course in retail development. I had an opportunity to get back in the golf industry, and it was kind of an opportunity I couldn't pass up, so I did. And then my wife got pregnant. We were going to have our first kid. Decided, all right, it's really time to slow down. It's really time to kind of build a family and really set up for the next phase of my life. And so I got back into real estate, doing single family investing and running a single family investment brokerage. And that's really where my investment journey started. I bought my first house, I think, in 2015. Sold it a couple months later. We can talk about that later. But bought it, realized I'd got in way over my head, sold it, made a profit, and then took a couple of years off before I bought my next house. Was probably in 2019, and then really started collecting houses from there.
Yeah. So let's say you bought your first investment property in 2015,
Yep.
you sold it, and then you didn't buy your next ones until 2019.
Correct. Yep.
And just so that everybody knows, you bought the rentals in 2019, and now in 2022, beginning 2022, you are at 135 doors.
Yep. That's correct. Yep.
Right. So your journey from 0 to 135 has been of about 3 years.
Yeah, it's been pretty compressed, and really I would say the last 2 years that I put a focus on it. Prior to then, I had about 10 doors, and then in January of 2020, right before COVID hit, I really wanted to put a lot of focus on it, on my own personal investing. I had helped a lot of people through the company invest in real estate, and I thought, man, I really need to focus on my own investing, and made it one of my 2020 goals, and put a lot of intention into it, established some partnerships, and really have scaled from then.
Yeah, cool. Well, we're definitely going to get into all of that story on the partnerships. What was the thing that got you to join Rat Race 2 in the beginning, and all of that. But we usually start the podcast too by asking, who were you in high school? Just so that the audience gets to know a little bit about you back in your teenage years.
Who was I in high school? So in high school, I was an athlete. I played football, basketball, baseball, ran cross country, was very active. I would say, I wasn't the most popular kid, but I was popular, knew a lot of people, just kind of a happy-go-lucky, kind of knew everyone, could talk to anyone type person. I was an Eagle.
There you go.
Felipe's not here.
Yeah,
but
Felipe's not here.
no, I graduated 5th in my class, I think. So, I was book smart. I was kind of motivated. I think I love sports, and I love team sports. My wife is actually my high school sweetheart. We met each other sophomore year in high school, started dating,
Nice.
dated all through high school, all through college, and then got married shortly after. So I would say I was I wasn't a jock. I wasn't, I was kind of really, I fit in with anyone. I just, enjoyed people, I guess. And,
Yeah.
And really just, meeting different people, hanging out with different people, whether it was playing football or playing baseball or, the whatever club we were in. So yeah, that's me in a nutshell, I guess.
That's cool. So like sports, and then into the books, book smart, all of that stuff.
Yep.
Similar like me. What was your time in cross country for the 5K?
I was slower. I think my best time was probably 17, mid 17s on a 3.1.
Mid 17s. I mean, slower. Shoot. Okay.
I was slower on my team, I guess. We had I know we won region a couple years. I ran in state, but yeah, I was definitely at the back of the pack.
That's cool. I was at 19, but I started my junior year.
Okay.
I couldn't break into, I knew that if I would have started freshman year, I could have gotten into the 18s.
Yep.
But yeah, it was fun. But you're also a tall dude.
Yeah.
I'm like 5'7",
Yep.
but
I was a lot skinnier
cool.
back then also. So.
Awesome. Well, cool. So we got to know you a little bit about your journey from college, a little bit in high school. Tell us a little bit about, because we met through Instagram.
Yep.
In 2020.
Yep.
And I remember that you sent me a message, a DM saying, "Hey Diego, I heard about Rat Race,
Yep.
but I own about 9 or 12 properties at the time." And you're like, "How is this mastermind gonna help me?"
Right.
And I know, and that was our first time chatting.
Yep.
Tell us a little bit about like what happened between 0 to from 2019 to 2020 when you sent me that message, just so that I can get to hear that part of your story, because I actually don't know it.
Yep. So I wanted to get back into real estate investing. I bought my first house. I sold it. Part of the reason I sold it was I was moving to Denver. Didn't really know too much about it. I was going to renovate the house, wasn't able to do that since I was moving. So sold the house, kind of took a little hiatus, moved back to Augusta, started working again, and was just kind of getting settled. And once I was settled, helped a friend flip a couple houses, really wanted to jump back in or really get started. I had only owned one house before. So really started digging in, networking, RIA groups, real estate groups, started buying some rentals, seller finance, kind of got into real estate that way. And about 40% of my portfolio is seller finance or creative financing. Bought, I'd say about 10 houses. I had a partner that brought a deal, and he said, "Hey, would you like to partner on these?" I said, "Yep." And it was funny. He's one of my good friends. I said, "Hey, I want to get back into real estate investing." He was a realtor. He would send me all these houses, and I was like, "No, no, no." And he finally said, "If you don't buy a house, like, I know we're friends, but I'm done. I'm not sending you anything else anymore." Like, and he sent me a great house, and he said, "If you don't buy this house, I would buy it. I'm passing on the deal to give to you. If you don't buy it, I'm not sending you anything else." And I was like, I'll buy it. So I bought the house, bought a couple more from a retiring landlord. He was able to do seller finance, and then my friend, he brought me a package and said, "Let's partner up on this." I said, "Let's do it. Sounds great." Bought a couple more, and that's really when I dug in the rat race. And It's funny. I said, I really need to get intentional. I think I can grow. I mean, 10 doors, 12 doors is a lot. And it's more than most people. When I thought, I got a good portfolio. If I can just get to 20, 25, like, I'll be good. I'll be comfortable. That was kind of the initial goal. And I said, "Man, I've been doing a lot of research." And I told he's one of my good friends and my wife. I said, "I've been doing a lot of research, really big into bigger pockets. But Instagram, I'm seeing a lot of people popping up on Instagram with real estate knowledge. And the more I like them, the algorithm is giving me more people to follow. And I'm reaching out, I'm connecting with all these people. And then I reached out to you, talked to Felipe, and I said, "Oh, there's this mastermind also, and I think I can meet some more, real estate like-minded people, have some accountability." And they both thought I was crazy. They're like, "That's you're wasting your time, you're wasting your money." My wife was like, "Oh, you're going to join a cult, like, whatever." And now it's totally different, right? They're like, "All right, I'm the visionary." They're like, "You were right, you saw it. You were kind of ahead of the time back then." And so we joke about it now, but that's it was really, I had a few doors. I wanted to focus on it. I wanted to grow. My goals weren't as big back then, and it was really just trying to find some accountability and some guidance to help me get to the next level.
Yeah. Now, with your first few deals, you mentioned that you did it through owner financing. Can you break that down as to where you, like, was the realtor able to negotiate for you, or did you negotiate it directly to the owner? How did that work out?
Yeah, so I negotiated directly to the seller. Had a relationship with them. I knew they were trying to sell their portfolio. They had done seller financing in the past to other folks, and so I thought, well, that's a good way to kind of get started, get in the mix, lower down payment. And so I really offered to buy about half, maybe a quarter to half of the package they were selling, trying to take some of the better properties out of that to get going. And we worked out a deal, kind of what they were looking for, what I was looking for, came to an agreement, and was able to take down, I think, 3 or 4 properties in one of those first seller finance deals.
Would you be able to break that down as to, like, how were you able to find something, right, that it's also something that works for them? Like, what usually works best for the seller, but that also works for the investor?
Yes.
For the audience here. So
that's what I love about seller finance is a lot of people, so we would offer, we would make like a bank offer or an all-cash offer, conventional financing, and we would also make a seller finance offer. And we would always offer more. Like, I was always willing to pay a premium on seller financing just to kind of sweeten the pot for them. And I knew we could always tweak it with the interest rate, the amortization schedule, anything like that. So it was all about like the negotiation and the deal. And I still love that part, but I'm a big win-win guy, right? So it's like, what can we do when we both walk away happy? It's mutually beneficial. And it's really just kind of getting to know the seller. A lot of people are just in it for the transaction. I'm in it. How can I help you? Like, how can I help myself by getting some properties? But how can I help you? Like, how do we work this out? I target retiring landlords because they've been in real estate for 30, 40 years. They've managed their rentals. They're tired of managing their rentals. They want to move on. And so it's an opportunity where they know if they sell all their properties, they're going to get hit with capital gains and taxes, that sort of thing. So for me, I know that they just want steady cash flow, and they don't want to manage the properties anymore. They're tired. They're older. They don't want to handle maintenance. And so I can handle all of that. I'm younger. We have a property management company. And so what I say is I can guarantee you that monthly cash flow, but I take on all the headaches, all the pains, all the pain points, because I'm managing the property. So you're just getting the mortgage. So they don't get hit with the capital gains. They still get their monthly cash flow, and I get to get into some properties, hopefully for a good deal.
Yeah, that's awesome, because you actually also get to negotiate what the down payment is going to be like. So the down payment, the interest, the duration of the loan, if there is going to be a balloon payment, which is like maybe in 2 years, they will want all of the money, but then you get to do a refinance or whatever. That's really cool. That definitely gets you into the opportunity of like helping at the situation that you are right now.
And for some of it, for some of them, I haven't even refinanced yet. They've allowed me to go 15 years on amortization schedules. So I'm just, paying them. They're the bank now. So I don't even have to refinance, which is pretty nice.
That's awesome. That's awesome. Yeah. So after you joined Rat Race, you mentioned that you joined for accountability and also to meet other people. Can you tell me a little bit about how that accountability actually helped you grow?
Yeah, no, absolutely. So I remember talking to you, Diego. You set me up on a call with Felipe. I get on the phone with Felipe, and once again, it was very intentional, right? Like, all right, if I'm going to commit to something, it's got to get me to my goal. And so I was interviewing you guys basically, like how is Rat Race going to help me? Felipe said, man, we're going to push you. We're going to challenge you. And we're going to connect you with other people, like-minded people. We have, just commit to the calls. We're going to introduce you to guest speakers. You're going to have access to those guest speakers. And I said, you know what? Let's do it. Like at the end of the day, and it was kind of a little bit of a negative mindset, if you will. At the end of the day, what do I lose? A little bit of money and a little bit of time. But there's potential for a lot of gain, right? So I kind of waited out and said, let's do it. That was in January 2020. And I don't think I missed a Rat Race podcast until
a call.
Rat Race call until it had to have been 2021. I mean, every Monday, every Wednesday, I said if I'm going to commit to this, then that's it. Like, bottom line, no excuses. And every Monday, every Wednesday, I just made the time, put it in my calendar, and was on every Rat Race call. And that was, I would take the time before the Rat Race call and the time after the Rat Race call and just commit to real estate. I'm gonna look for deals. I'm gonna look at my portfolio. I'm gonna analyze deals. I'm gonna make offers. And it was in that kind of evening time frame that after work, after my W-2, I was just focused on my own personal investing. And because of that, I'm reading the book Atomic Habits right now, but because of those, just that small commitment each day, each and every day, it has turned into some big things.
Yeah. And what's crazy for us is to see the growth that you've had by leveraging also the network.
Oh, absolutely.
And the being accountable, and just like you said, taking the time and prioritizing, right? Because you also have a W-2 job, you have a family. There's so many different things that you can create excuses on, you don't have the time, but you actually committed and prioritize building your real estate portfolio. So how did you begin to grow that after you joined Rat Race? What got you from like the 12 or 13 doors into, let's say, the next 15?
Yep. So I had some commitments already in place, and that was I knew I had some other seller finance deals that I basically committed to. I was just trying to save up the capital, and so just by building relationships, I said, "Hey, we want to sell to you. We have a relationship with you, so we're going to sell these properties to you. It's just when you're ready, give us a call, and we're ready to sell." So I kind of had those. I had those properties pegged, earmarked, and so I knew my trajectory to get there. Get in a rat race, you meet a lot of great people, the network. We had the accountability calls, the accountability groups, and so I had a fantastic group, Nadal and Shannon. Nadal was doing, syndications. He was flipping in Kansas City, and Shannon had just done a big flip down in Florida. And so it was exciting. It was like, okay, these guys get it. And we were real consistent on our accountability calls of, what's your next move? What are you doing? And so just from that, it was like, all right, I'm more focused. I had a lot of clarity at that point. I wasn't watching Netflix. I wasn't watching Hulu. Just it was work, family work, real estate. And so that, I was saving money because I wasn't going out. I didn't even care to go out to dinner. It was like, nah, let's Zillow. That's my time. And so I would say the accountability, which is what you and Felipe promised. Felipe was sending me texts. What did you do today to improve, to take one step further in your real estate goals? And it was small things like that. That was like, oh man, I better do something. Like I'm not going to respond back to Felipe like, well, I haven't done anything yet. It was just like, this is what I signed up for. This is why I'm here. And so more progress. So that accountability, the network, I mean, that's hands down. I've been with you guys for a couple of years. The network in Rat Race, it's family, right? Anything you need, you can find in Rat Race. And that's, I think, so many people want to get in. You guys have done a great job curating this culture of family and friends that if you need money, it's there. If you want to syndicate a deal, raise partners, it's there. If you want to do short-term rentals, Diana. If you want to do wholesaling, Naaman, right? Like anything you could dream of in the real estate space is in Rat Race. And so it was kind of, for me, it was like Pandora's box where it's like, all right, I can do anything I want. What do I want to do? And I stayed focused on, I just want to build my long-term rental portfolio. I know that if I just continue to grow it, it will compound and I'll have some exponential growth. And so I was solely focused on that.
And what has been your evolution going from single family going into the multifamily space? Because I also know that that you were buying single family homes like duplexes, quadplexes here, but now I want to get into the 16 unit.
Yeah. So I think I took the general progression of every real estate investor. You buy a few houses, then you want to get into small multifamily, duplexes, triplexes, quadplexes. The cash flow is better. You get more doors, and everyone gets hung up on that door count. And it's really about the cash flow, right? The duplexes, triplexes, quadplexes, it really helps out with that cash flow. So I naturally progressed into that, started flipping again, and at some point it was stressful. It was exhausting. And I say that I had met some people that were doing small multifamily. We started making, putting a focus on it in my W-2 in the business. And what I realized was, okay, this small multifamily is obtainable. Like I can do this. I'm seeing the commercial loans. I like the commercial loan product better than the single family loan. I like how they're valuing properties on appraisals on the commercial side than, traditional comping houses. And so I thought this makes a lot of sense, trying to get into a small 12, 16, 20 unit property. But I don't have enough money. Right. And that's the limiting factor. It's like, I can't do that. I had met some investors that were kind of mentoring me in this small multifamily space. Basically, they said, we'll teach you whatever is you want to know. We'll teach you. Just follow. When we purchase a property, just kind of follow along. And so Jason, who is a GP on the 34 unit, he was one of the first people that I was helping him actually in multifamily on the management and renovation side, which I knew. And so the trade-off was, as I could help him with that, I was learning the acquisition side, the strategy side, all of the different aspects of it. His portfolio, multifamily portfolio, continued to grow. And as it grew, I was along for kind of that journey, along with some other investors that their portfolio was growing, whether it was 16 units, 28 units. Then we got into some 75 units, 83 units. And Jason was able to take down an 83 unit with some other investors that he was going to 1031 selling his 16 unit. So the opportunity kind of came up where he was like, if you want it, I'll sell it to you. It's like, well, let me run the numbers. So we ran the numbers. I don't have the money to take down that by myself. And that's where we started leveraging partnerships.
Exactly.
If we all, it doesn't have to just be me, but if I can have a piece of the 16 unit, I'm in the deal. I can learn. I have the stability of 16 units versus, one house or two houses. It's a better opportunity. So reached out to you guys. Hey, I think we were actually at the retreat when that came up. That's right. The February retreat.
Yeah. And that is a power of going to events to network with other people, because the whole 16 unit conversation, it didn't happen on the phone. It didn't happen on Instagram. It happened in person.
Yep.
Just because you started talking about the opportunity and we're like, that seems doable for us to actually do it together.
Right.
Like why not?
Yeah.
Right?
Yeah. No, it was, we're at the Rat Race retreat in, I think we were in Pensacola. And it was, we were hot seat type scenario. What problems do you have? And it was like, well, I'm trying to grow. I'm trying to scale. And I've got this 16 unit, and it's an opportunity that I'm the only one that knows about it. How do I take it down? And everyone's like, well, what's it going to take? And we start running through, and it's like, well, the five of us could take that down. Like, why don't we do it? And so we started kind of putting the puzzle pieces together, and after a long journey, we got that one closed.
That's awesome. No, and that's one of the, like, being able to buy that property with you guys is what put me from 30 doors to 46 that I have now. So,
nice.
So that's awesome.
Nice.
That's awesome. So, and then now you are getting into the syndication route too. And I feel like it's definitely a way of, like, how you've grown, like your evolution as a real estate investor that leverages their connections, because I believe that all investors have an unfair advantage. Right. And it's up to you to choose it, whether it is time, knowledge, connections, whatever. Everybody has one.
Yep.
And I feel like yours is definitely the knowledge of the market here in Augusta and the surrounding areas, but also the network that you have with other investors that can take on that opportunity. So tell us a little bit about how you decided to not just go hey, I'm going to get into the multifamily, but now I'm going to get into syndications. And can you explain what a syndication is too?
Yeah, so a syndication is basically it's essentially a partnership of investors that put their money into acquiring a property. It doesn't have to be in a property. It can be other assets, but a pool of investors that pull their money together to take down an asset. Most real estate syndications are broken up between general partners and limited partners. So general partners, they typically find the deal, they manage the asset, they put everything together. And then the LPs are typically investors in that deal, more passive investors. So my trajectory, it's one of those things, Diego, continuing to build the network, right? Continuing to grow. And as I think so many people get stuck on, I can't find a deal, there's nothing out there, and the the deals are there. You just got to go find them. And after you've purchased enough deals, the deals start to find you, right?
Mm-hmm.
And so I think that it's making offers, it's showing that you're interested, talking to people, networking. This is what I do. This is what I'm looking for. And I think a lot of people are scared at first to do that. I was too. It's how Flip Augusta got started. I didn't want to share that on my personal Instagram, so I created Flip Augusta and thought, well, if my friends, family don't see this, but like I got to get some knowledge out there. So, really with the number of flips I was doing, properties, investing, the opportunity kind of fell into my lap. Somebody reached out and said, hey, I don't have enough money. I've got an off-market deal. I want to take it down. What do you want to partner? I said, well, I don't have that much money either, but it's a great deal. The numbers were phenomenal. Can we syndicate it? And Tiago, who's in Rat Race, he and I were kind of sub GPs on another syndication deal that through networking, through Rat Race, we jumped in on that other syndication to learn how to syndicate properties, because we thought if we can bring these opportunities to Rat Race or other investors, we can continue to grow our portfolio.
Mm-hmm.
So I had a little bit of experience and knowledge from that syndication, and so when the property presented itself, I said, let's do it. Let's try it. Like, I think we can do it. The numbers look great. I know the property management side. I know the renovation side. We know the strategy, the reposition. There's potential. We just got to figure out the legal side. So we put it together. We said, hey, let's do it. And we reached out to our network once again, got a handful of attorneys to kind of interview and talk to, and accountants. And we talked to a number of other syndicators. How do you do it? This is going to be our first deal, and really wrapped our heads around it and started calling some folks about the opportunity, seeing if they'd be interested in investing, and yeah, we put it together.
Yeah, that's cool. But what's really important is that trajectory of how you got there, because people see hey, you just, like, you're the GP on this 34 unit that we just closed, but they forget like all of the years and like the work, the connections, the talking to people, going to networking events, all of that, and even learning and sort of like mentoring on another syndication, so that you could number one, learn the back end, right? Raise a little bit of money, bring it to your people, but also seeing what that experience looks like. And that's one of the reasons too why I invested in that syndication too, because like the deals are great, but I believe too the person, it's somebody that I want to invest with too, right? So that's why I invested a little bit on that syndication, so that I can see what you're learning as well. And then knowing that you were going to take what you learned from that one into this first one, that it will be you as the main GP, I was like, let's do it. Right? Because I believe that, again, going back to your unfair advantage, like I want to leverage, right, the connections that I have, leverage your knowledge, leverage your connections too, by being one of those investors.
Yep.
So that's awesome. And you've built that trust with other people too. And that's why you have a lot of other investors within Rat Race that want to buy here in Augusta, because the numbers work, the cash flow is there, and the market is growing a lot.
Yes, so I think there are three things to that, Diego, just kind of dissecting the question a little bit. Yeah, people don't see how much goes into all of this stuff, how we got to this point, right? Instagram is, hey, we closed on this 34 unit. Everyone's excited. That's awesome. That was not anywhere on my radar even a few months ago,
Mm-hmm.
right? Like that was an opportunity, and it's that limiting belief, right? We are our own limiting belief. So several years ago, 2019, I guess it was, when I was getting back into investing, told my wife, I'm going to buy 50 houses in the next 5 years. She's like, how are we going to do that? I don't know. But like, I'm reading this book, like everyone else, I'm reading this book, and they say, put a BHAG, big, hairy, audacious goal. I had, got to 10 properties in the first year, 20 properties. Second year, I was like, I'm on track. I'm making progress. And I was running out of money at that point. She's like, I don't know how you're going to do it. And that's where around the time I was getting into rat race, partnerships, leveraging partnerships, other people's money, that's the power of real estate, right? That's how everyone gets to the point they get is through that. And I would challenge anyone to challenge the people that you see, whether it's Instagram, your local RIA groups, wherever, is how did you get to the point where you are? And I think to scale faster, it's leveraging your network. So yeah, there was no way I was going to get to 50 houses in 5 years. I knew I didn't have enough money, but it was like, we'll figure it out. Don't limit yourself. Let's just throw a number on it and we'll figure it out later. That's where Rat Race came in. And I was, I think with Tiago 1 year, this past year, we did 50 in a year, right? So it's
crazy. That's awesome.
It's think bigger. I mean, we talked about that last night. That's one of my big mottos, but don't be your own limiting belief. The other parts of it too, 52 weeks a year, holidays, we probably miss a couple rat race calls, but I've got over 200 hours in rat race calls. I've got hours dissecting deals, my W-2s real estate. So I have thousands of hours at this point doing real estate. Not to say that, you have to have all that to get to the point. I know people that jump right into multifamily, that syndicate multifamily, day one. I didn't have that. That wasn't my trajectory, but I've got thousands of hours into real estate at this point to kind of get to this point.
One of the things that you mentioned earlier that I really think it's important is when they brought you the deal and you didn't have the money, you didn't say, well, I cannot buy it.
Right.
Sorry, go to the next investor. Yep. It's like you ask yourself, okay, I don't have the money, but how can I buy it? Yep. What can I do? And that is that's a skill that a lot of people can grow into getting, right? But they have to practice by just asking themselves the right questions. If you ask yourself the right questions, good quality questions, you get good quality answers, right? And so yeah, I feel like by you not saying no, but asking how can we do it, you've actually been able to put yourself in a position where now you own all of these doors. And I think we're gonna continue to grow into many more syndications too.
Yep. Yeah, and so I remember the third thing, backtracking, because it ties into this transparency. Yeah. A lot of rat race, we've supported each other. It's been through transparency. When they say, how did you do it? This is how I did it. Here are the numbers. Yeah. Here's my spreadsheet. There's no hiding anything. And that's what I love about the community. And now they go, okay, we trust him because we see it. This is what we've learned, and we can grow together, right? I think that's the exciting thing. And yeah, I would say an unfair advantage I have is continuous improvement is something I learned at Augusta National. It was always, how do we make it better? And so my mindset has always been that. And I think when problems come up, I'm trying to figure out the solution. Yeah. It's not, that's too hard, or I don't want to do that, or I can't do that. It's how do we figure it out? How do we make it better? I don't want to hear how we can't do it. I want to hear how we can do it. And that mentality is how we syndicate a 34 unit with no experience having done syndications.
Yeah, no, that's awesome. And one of the things, if you haven't, when we bought the 16 unit, right before we bought it or whatever, we made you and Tiago share it on a rat race call. Right. And just to see, so that Felipe and I can see the numbers, we went deep for an hour or an hour and a half on that deal. Yep. And we got everybody in Rat Race to watch it. Yep. You're going to pick up a trend here. Then when you said, hey, Diego, I want to get into syndications, I was like, great. Why don't you do a presentation in Rat Race on syndications? Right. So it's sort of like us to seeing, putting you in positions to so that you can share it with Rat Race, but then we also see us okay, holy crap, this guy knows what he's doing, right? And he's being able to speak for hours on this. You build that trust, and you're as transparent as possible. Yeah, I mean it's diving in, right? It's and people learn different ways. I just a few weeks ago we were having lunch with somebody, and they were talking about how they wanted to get into syndications and that sort of thing. And I was like, well, I'm doing one. And they're like, oh, did you read
this syndication book or that syndication book. Now, I didn't read any books, but I did leverage my entire network. I was reaching out to this syndicator and that syndicator, and I think that's just kind of a philosophy on life. A lot of people, school, college, or book smart, that sort of thing. I had that, but I also did a lot of internships, and I learned that the experience and the network that I had through internships was far more valuable than kind of the textbook reading I had done in school. And so I've always kind of gravitated to that side where it's like I could read a book. It's going to be pretty basic, but let me find out the real life situation with other syndicators of how this works. What are the real pain points? What are the things I need to be looking out for and that sort of thing?
Yeah, no, that is great because you actually get to hear from firsthand experience rather than what actually people want to read in a book, right? Because sometimes they might not share everything. They share the good stuff, maybe a little bit of the bad stuff. But when you're talking to somebody, they give you the real stuff.
Right.
Right. And that is something that is not usually found in books.
Yep.
So what is next for you? What we just went through the conference too with Rat Race on goal setting. You had great conversations there. What does 2022 look like?
2022. So two things. We talked bigger. The Rat Race conference was amazing. Goal setting conference in December. I went to that conference with a vision. I was going to try to raise a little bit of money so we could do a couple more deals. And I got there, and I actually was sitting at the bar before the conference. Had gotten there early, was having a drink before the conference kicked off with one of your business partners, and the conversation was at an entire another level. Having talked to him before, but meeting him in person for the first time. And I thought, man, this is a great conversation. And then we get into the conference, and the conversations are just at a whole nother level. And I left thinking, okay, I came in with a vision. I was supposed to set my goals. Yeah, crumple it up, throw it away. I've got to think bigger. And so I kind of left the conference with three things: think bigger, build better, and network smarter. Network harder. We changed it to network smarter last night.
Yeah.
And what I'm getting with that is, all right, think bigger. I wanted to do 50 houses in 5 years, knocked it out in a couple. I didn't think I was going to get into multifamily, syndicating this quickly. We're here. So really at this point, there's not anything we can't take down, right? We're looking at development deals. We're looking at buying outside of Augusta, going national, opening up to different markets. So if I set a goal, I feel like I'm limiting myself. We can take down whatever, at this point, whatever's an opportunity, I think we can figure it out. The think bigger is how am I going to challenge myself in ways that I've never been challenged before? And how can I challenge others in ways that they've never been challenged before? The build better is I need to create the systems, the processes, the procedures in my business so that I can focus on more of the vision and the think bigger aspect. So that way the business is kind of taking care of itself. And then the network smarter. How am I going to do all of those things? Is I'm just going to network. And those people are going to help me build better and think bigger, right? They're going to challenge me, but they're also going to build out systems, processes. How are you doing this? How I should be doing this? We sat down last night and, we cheers, congratulate each other on the 34 unit. And the first question you ask me is, what's the bottleneck in your business, right? Yeah. And that's the network smarter. Like that's, all right, now I'm getting challenged on the build better and the think bigger aspects. So that has led me with a lot of clarity leaving there in some funds and the fund aspect. And so 2022 for me, I think is collaborating with a lot of different people that I met at the conference and some other folks that I know, and seeing how we can find opportunities for different types and styles of investors, collaborate and bring those opportunities to them so we can create some funds. That may be short-term rental funds, that may be new development deals, multifamily, single-family home packages, flips, you name it. But my unfair advantage is networking, it's collaboration, it's being able to have that big vision and then pull all the pieces in together to be able to create that. So with the help of you guys, that's kind of what's on the horizon for 2022.
That's exciting. 2022 is going to be an amazing year, and I'm excited to see how you're going to grow. And I'm ready to invest with you. So, yeah. Now, Philip, so what is one of the best ways for people to reach out to you?
Yes. So Flip Augusta is my Instagram handle. My email, philip@flipaugusta.com if you want to reach out to me. And yeah, I've got my personal Instagram @Phil Vera. If I know you, I'll let you in. If I don't know you, let's network. Let's network smarter. Let's get to know each other a little bit better. And happy to have you along for the journey.
Awesome. Well, Philip, thank you very much for this opportunity. We're definitely going to do a part 2 so that we can have Felipe be on the podcast as well. And so, yeah, thank you very much for your time. And right now we're about to end this podcast and go see the 34 unit.
Let's do it. No, I'm excited. I appreciate you having me on, Diego. Excited to do a part 2 with Felipe. And yeah, let's go check it out.
Awesome. Thank you.
Yep.
The Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place.